In terms of today, welcome back to the yo-yo. Last Thursday we had a decent day. We had those the Amazon and Google earnings. After that, we had an update and everything collapsed. Yesterday we were chugging along. They were kind of fading, and then you had the tariff comments. It came back. Last night, President Trump came out and said, we're going to have a great deal with China. Did that help contribute to some of the positive flavor today? Perhaps it did. Look, I'm looking at the markets now, and this morning, for the first time in a long time, I tactically upgraded U.S. stocks to an overweight. I had them at neutral.
Why this morning?
This morning, I finally said enough is enough. We need something here, and I'm just seeing a lot of companies just getting pounded on for no reason. We mentioned the move into semiconductors, and everyone said, oh, they're down 20% off of the highs. Look, Intel earnings, not bad. Clack last night, not bad. Xilinx last week, not bad.
But Michael, earnings have been good for the last couple of weeks, and nobody has seemed to care. I guess my question is, to Mike Santoli's point, why suddenly now the volatility, these 1% moves intraday?
Sure.
Why now?
It's crazy, and look, so these 1% moves intraday. Yesterday, the range in the S&P 500 was 103 points. That's not healthy. I'm recognizing
900
that.
in the Dow.
We're in for a lot of that, sure. And, not healthy either. The point is, I'm getting to the point where I'm starting to hear about Q3 numbers. I'm starting to hear about how people are doing in October, and there's a lot of folks throwing in the towel. Some very smart hedge fund investors talking about their Q3, how October wasn't any better. When I start hearing all the talk like that and all the doom and gloom and all the funeral dirges, it's finally time from a sentiment standpoint to say things are not that bad, things are pricing in. That's number one. Number two, next Tuesday we have this midterm election. If it goes according to plan, or even if it doesn't, it's a big overhang. It'll be out of the way. People can focus on other things. I think that's a big overhang right now.
Well, let's talk about what we got from earnings, because there actually were a few notable winners today, Mike. I'm not sure it says anything about the overall environment. Mondelez, Under Armour, Coca-Cola, besides all of them being covered by me, which is a total coincidence. I'm not sure it turns the tide on the narrative where the focus has been on the negative.
I don't think it turns the tide, but what it does show is that the market is still capable of reacting to individual corporate developments, at least in isolation, right? So I don't think it's going to be everyone deciding one day that, oh, wait, we were wrong. Earnings are actually worth buying here as a across-the-board proposition. But I do think that sometimes earnings season goes like this. The first half of earnings season seems like, uh-oh, they're selling them on the news, and then stocks go down enough that they're susceptible to upside surprise. So I do think that, you can kind of knock around, and I think you can knock around, you probably agree, you could probably knock around in here with the S&P 2 to 3 points up or down. It still isn't going to really tell you that much as to whether we're in a new range.